Welcome everybody to the Beneficial Ownership Information Reporting webinar. This is in partnership with the Vermont Small Business Law Center and CVOEO Microbusiness Team.
Sorry, let me go on to the next slide.
Just a little bit of housekeeping. I will keep the recording on throughout so that we can send it to folks that weren't able to join today. While we record, we ask folks to mute themselves when they're not speaking and to throw their questions into the chat so as not to interrupt Nicole while she presents. And also, if your name isn't shown as your first and last name, if you could possibly change that for attendance purposes, that would be wonderful as well. When we're done with this webinar, I'll make sure to send the recording to you along with contact information for our team as well as Nicole's team and additional resources. And without further ado, I'm going to pass it over to my colleague, Simeon Geigel.
Thank you, Sophia. Greetings, everybody. Thanks so much for joining us today for today's presentation, which I am personally looking forward to learning more about. I just want to take a brief moment to do some introductions here, specifically for the Micro Business Development Program. If you're not familiar with it, I know that some of you are on today's Zoom class, but the Micro Business Development Program is a statewide program that helps low to moderate income Vermonters start or expand a business. And there's no cost for our services for those that meet our eligibility guidelines. And so if you're interested in connecting with us to learn more about our program or moving forward with us, please don't hesitate to reach out. You'll see that we have 3 business counselors here at CVOEO, Micro Business Development Program, myself, Simeon Geigel, John Gergley, and Pacific Sangayuba. And this information will also come with the email that Sophia is going to send out after the presentation. So by all means, if you want to reach out to us, I encourage you to do so. We want to help people start sustainable, successful businesses. Next slide, please, Nicole. So I mentioned that micro business is a statewide program. There's a total of 5 micro businesses around the state. Each micro business covers a certain set of counties, making up the coverage for the state of Vermont. So in the southern part of the state, we have Brock that covers Bennington and Rutland. Capstone Community Action covers Washington, Lamoille, East, and West Orange counties. CVOEO, my program, covers Addison, Chittenden, Franklin, and Grand Isle. NECA in the Northeast Kingdom covers Caledonia, Essex, and Orleans County. And SEVCA covers Windham and Windsor counties. And I'm sorry, we have to update the counselor for that area. My apologies. So if you are in one of those counties, Windham or Windsor, please feel free to reach out to me and I can provide you with the contact for microbusiness for SEVCA. And please don't hesitate to reach out to us. You'll have these slides, and of course you'll have the contact information on here to reach out to the person that covers your county. But there is a microbusiness website that makes it a little bit easier as well. That's mbdp.org. So reach out if you're looking to get some assistance with starting or expanding your business. Next slide. Thank you. I also like to let folks know about other business support services in our area. I'm specifically thinking of the area that we cover in the northwest corner of Vermont, but some of these programs do cover statewide and some are federal organizations as well. If you're in the Burlington area, we've got the Burlington's Business and Workforce Development Program, Center for Women in Enterprise, Mercy Connections Women's Small Business Program, the Vermont Small Business Development Center, SBDC, the Small Business Administration, SBA, that's a federal program, and finally, Champlain Valley SCORE. Next slide, please. Would just like to do a quick shout out to some of our partners that's helping to put on this class today. We've got the People's Trust. People's Trust Company offers a variety of commercial and business banking products and services, as well as business consulting services to help their clients succeed. The contact person for People's Trust, if you're interested in connecting with Jay Cummings, is below, and obviously this will come with the information Sophia is going to send out. Next slide. And finally, the regional development corporations. We've got the Greater Burlington Industrial Corporation, Lake Champlain Islands, Economic Development Corporation, Franklin County, and Addison County listed here, covering the kind of the northwest corner of Vermont. So the Vermont's regional development corporations are the state's primary partners in implementing economic development in our regions. So if you want to connect with them to access their services, you can contact them at or reach out to them at rdcsofvermont, all spelled out, .org. And again, this slide will be with the information that Sophia is going to send. Next slide, please.
All right. I think that's me now.
Great. So finally, I'd like to turn it over to Nicole Kaloran. She's a director from the Vermont Small Business Law Center. I'm thrilled to have Nicole back. She's been so generous with her time and is setting up just like a more than a year series of different business law classes with our program. So this BOIR class is one that she specifically is doing for us. So I really appreciate it, and I'm looking forward to learning all about it. So Nicole, I'll turn it over to you. Thank you so much.
You're welcome, and thank you for having us. This is, we're about halfway through the first year of this program, and it has become, unfortunately, a point of anxiety for a lot of small business owners that we're talking to. And so we wanted to get some information out there to clarify things, explain it, and give a chance for folks who attend to just ask questions. So that's what we're doing here. You can see the agenda. We're going to start real basic, do an overview of the reporting process, and talk about the deadlines. We'll get into who is a beneficial owner, because that's one of the big pieces about this reporting, and then who does not have to report. And there are some folks, I'm sure, who are on this call who will not have to report, so that's probably a relief. There are some penalties. There is some consequences for not complying with this law. We'll look at who can see reported information. It's not a lot of people. And then I'll have a few tips for compliance. So throughout, I really encourage everybody to ask questions. I prefer that you put them into the chat if you can. And I think Simeon's going to be monitoring the chat. I will try to answer questions as we go along, or I'll just pause from time to time as I get through the information, and I'll go back and look for questions. So drop them in if you got them. Let's get going. So starting real basic, these are the three words that you're going to need to know when it comes to beneficial ownership information reporting. The reporting company, beneficial owner, and a company applicant. Those are the three main parts of the pieces of this law. The reporting company is going to be the company that has to do this stuff, who has to file a BOI report. We'll go through and figure out who the reporting company is and who has an exception from that in a little bit. Beneficial owner is someone that has to be reported as a part of the BOI report. And a beneficial owner is someone who either owns more than 25% of the business or has substantial control, like senior executives of the reporting company. We'll get into a little bit more detail about beneficial owner and who counts as that too. Company applicant is an important one. This is another person, or could be the same person, could be the owner of the business. The company applicant is the person who's actually clicking to submit the report. So that could be it could be the person who, it's the person who actually filed with the Secretary of State, not the person who's filing the report. The company applicant could be an accountant. It could be an attorney. It could be the owner of the business themselves. But that company applicant, the person who filed the paperwork initially with the Secretary of State, has to be reported as well. So those are the three phrases you need to know for this law. Know that it comes from the Corporate Transparency Act, and it is administered and enforced by FinCEN, which is the Financial Crimes Enforcement Network. It's part of the U.S. Treasury Department. It's intended to try to combat financial crimes like money laundering. It's intended to try to locate little tiny shell businesses that are set up to take money and to launder it through, or to support financial crimes. That's the purpose. And to do that, they're casting a very broad net to try to figure out who the beneficial owners are for all small businesses in the country. It does target small businesses. The point is that it wants to learn who controls them and owns them. When it comes to your own business, the three important questions here, and again, I'm going to get into more details on these, but the three important high-level questions: does it apply? If it does apply, who has to be reported? And then what are the deadlines? So those are I encourage you to try to take those away. If you think you do need to report, try to write down the answers to those questions by the end of this webinar. And then final point, penalties really hurt. We'll go over those too. So the reporting process itself, this is not a super complicated process. This is something that has to be done electronically. There's not a lot of information that has to be disclosed. You can see on the right-hand side here, the info that has to be disclosed for the reporting company and for the beneficial owner or the company applicant. You can see the address here for the electronic filing. It is simple. Anyone who is authorized can file. It doesn't have to be the owner. It doesn't have to be an accountant or an attorney. It can be an employee. And the main things here too with the reporting, the timelines to know about during 2024. If a business existed before January 1st, 2024, they have until the end of the year to file their BOI report. If there is a business that's formed during 2024, soon after the business forms, they have to file their report. And if there's any information change, that takes another report to file a change report. That's just during this year, okay? After 2024, it's just going to be a standard. Anytime a business forms, a BOI report has to be filed. And when information changes about the company, that has to be a change report. The information you can see, again, it's not that complicated. Some of it gets a little sensitive because it is asking for personal addresses and street addresses, but you can see the reporting company has to disclose the legal name of the business, any DBAs. So a DBA is a doing business as, that's just a name that a person or a business is doing business under. The current street address, not where mail is received, but the current street address of the business, where it is registered, so the state that it's registered in, and then the employee identification number has to be disclosed too. Pardon me. For the beneficial owner or the company applicant, so the reporting company, that's the information that has to be disclosed. The beneficial owner or the company applicant info is going to be the name, the date of birth, residential address for that person, and then there is going to need to be an upload of a photo ID, usually either a driver's license or a passport. So that's the reporting process in and of itself. I'm just going to pause and see if there's any questions here. Already registered with the Treasury of State, with the Secretary of State. I think that's what you meant, Paula. And I'm licensed and insured already. What else do I need to do? Set up a business account through your bank and have an EIN. Current address equals physical address. So that's correct, John. So there's not going to be any PO boxes disclosed in this reporting process. It's going to have to be the physical address of the person, and that could be overseas. So maybe you could clarify, Paula, are you asking what else you need to do to file this report? Okay, so you've already filed the BOI report. Is that correct?
Good morning. Actually, sorry, it's a lot easier. So I have a business coach through CVOEO, who is Pacific. I'm also working through Higher Ability. So I'm the owner. I'm the only employee. I own a cleaning business. I'm already working. I'm insured, registered. I've registered through the Secretary of State. And I also have a business account set up with my EIN number. So I was wondering if there's anything else at this point that I need to do going further for my business.
That's something that I can't give advice here, unfortunately, and I have to sort of stick to this topic. I would say that if you're at that point, the next step for a business that's registered, has their EIN, and has everything set up, the next step for that business is to look at filing this BOI report. So that's going to disclose a lot of the information about the business, and it only applies to businesses that have been registered. So there was somebody who put a question in here too that just said, I'm not registered and I don't have an EIN. Sole proprietorships that have not been registered with the Secretary of State do not have to file a BOI report. That's the current state of the law. So that includes too, if an individual is just doing business under a different name for themselves, say it's John Smith who is doing business as John Smith's Widgets, and the John Smith's Widgets is just registered as doing business as a DBA with the Secretary of State. It's also called an assumed name. That does not require a BOI report because there's not an actual business entity that has been set up with the Secretary of State. It's just somebody who is saying, I'm doing business under this name. So hopefully that makes sense. And then, yes. So this is so the steps that you described, Paula, that's the steps that folks have to do to set up their business. Now businesses have to add this additional step on filing the BOI report.
Okay, I'm on board now. I got it.
So Nicole, Simeon here, just to clarify, a couple of things. One, if somebody just has an assumed business name, they don't need to register with the BOI report. So that means if they're an LLC or registered in another way with the Secretary of State, they do need to do this.
That's correct. That's
Okay.
correct.
And also just to clarify, if they've started their business after January 1 of this year, I'm under the impression they have 3 months to get this done.
They do. I've got a deadline slide.
Okay,
Just
great.
wanted to highlight overall in the reporting process, this is what they need to do during 2024. And yeah, there is a deadline for folks who file this year.
Gotcha. Thank you.
Yeah. Stephen Marshall asked, is this registry going to be used to track down major corporations and billionaires exporting their money to offshore tax havens? That is the hope. I'm not sure how effective it will be. I think the idea was to target these small little shell businesses that are holding assets or holding, yeah, it's a great question, Claire, I agree, that are holding assets or laundering money or whatever it is. So hopefully they will find some tiny little businesses that were just set up for those purposes. I don't know how effective it will be. There is a large number of exemptions of different industries that are taken out of the reporting requirement, and large businesses who have over 20 full-time employees and 5 million gross revenue are exempted from reporting as well. So to be determined, Stephen. Let's go on to the next one, which is going to look at deadlines. There we go. Okay. So if a business was registered with the Secretary of State before January 1st, 2024, then by January 1st, 2025, they must file their BOI report. So any pre-existing businesses that registered before January this year, you have until the end of the year. If a business was started up and registered with the Secretary of State during 2024, within 90 days, they have to file their BOI report. And then after 1/1/25, anybody who registers just has 30 days after registration to file. Technically, it's 30 days from the date that the Secretary of State says, here's the certificate saying that you have formed a business, but it's best just to say within 30 days of filing. That's when the BOI report is due, after January 1st, 2025. Something to highlight here, though, is that there is a requirement for reporting changed information that has changed. So I'm going to go back to the things that have to be disclosed. The legal name of the business, any DBAs, current street address where it's registered, and then the EIN. The beneficial owner or the company applicant is the name, date of birth, residential address, and their ID. Okay, so if any of that information changes, that has to be reported within 30 days of learning about the change. That's pretty tight. And that means that there may need to be an additional process set up within one's business to make sure that, that this information is being checked as current regularly. We'll talk about that at the end here too. But that is something to be aware of. 30 days from the date of a change occurring has to be reported in those pieces of information. That's, mind you, about the reporting company or the beneficial owners. The company applicant is sort of static. That's a person whose information is not going to change because they just applied. They might actually be the same person as the owner, but they're the applicant. It's a separate category. So there's no report due if there's changed information for the company applicant. But for the company or the beneficial owners, any information change there has to be reported within 30 days. And I see we have some more questions. Okay, here we go. Contractor whose jobs never exceed 10,000 does not need to register, thus do not need to file a BOI. Is there a general rule for small businesses like a small retailer? As far as I know, we'll go through the exceptions. A contractor whose jobs don't exceed $10,000 is not one of the exceptions. There is an exception for unregistered businesses, so people who are just doing a DBA or just a sole practitioner or sole proprietor and they haven't registered with the Secretary of State. There's an exception for nonprofits. There's an exception for large companies and some of the heavily regulated industries, but nothing like what you've described here, Stephen. Elise says, if you're a sole proprietor with a business that has a name registered with the state for many years with no employees, do you need to file this BOI report? So if a person has registered, so that sounds to me, Elise, like it's a DBA, like it's doing business as registration with the Secretary of State, saying that this person is doing business under this name. If that's it, if that's the only thing that has been filed, that has not set up a business entity, is not set up an LLC or a corporation or anything like that. If that's true, if it's just a DBA, then that person does not need to file a BOI report. There's no entity that was registered to file it on. If one renews their driver's license, does that count as a change? If there is a change of address on the driver's license, if the driver's license number changes, if the name of the person changes, again, it's this information back here. Name, date of birth, residential address, and then the ID. So if anything about the ID changes, that does trigger a change report. My business is a worker-owned cooperative. Cool. Legally, a corporation choosing to operate as a cooperative. Very cool. 8 employee owners. How do we determine who the beneficial owner is? It's a very specific question. Do we need to submit all of our owners' info, or can we just submit our president's info? Latter would be ideal. It would significantly reduce the amount of times we have to submit updates. Understood. And I'm not sure if you pronounce your name. I would pronounce it Shammy, and I'm sorry if I'm mispronouncing it. That is a great question. I'm going to hold on to it and I'm going to come back to it because I think we'll answer that in a couple of slides. Is the information filed on BOIR kept private or is it public record? So I'm going to come to that too, actually. The answer is that it's primarily private. It can be accessed by some law enforcement agencies. Shammy. Okay, good. Okay, I'll come back to that question though, Shammy. That's a good one. All right, deadlines we looked at. Who is a beneficial owner? I've put a nice picture of Montgomery Burns up here for you. The person who is a beneficial owner has substantial control over the company's operations. So you can see the list of the examples here. Senior officer, so that's going to be your president, your vice president, your treasurer, your secretary. A person who has appointment or removal authority. So that could be a person in the company who has, it could be a board chair who has the ability to remove. It could be a hiring manager. Important decision maker, somebody who has the ability to make important decisions for the business itself. So that's the analysis to go through, or the person who controls at least 25% of ownership interest. And that category, the control category, does primarily speak to investors, somebody who has more than a 25% ownership interest in a business, but it could also speak to members of a cooperative. I don't know the answer to your question, actually, Shammy. What I think you should do is go through the analysis and say, okay, are any of the members, do they have any ability to remove or hire or fire? Do they have any ability to make important decisions for the business? Or is it just the senior officer? Is it just the president? I would be happy to get you to an attorney if you need specific advice for that, but I can't give you advice on that. It has to be education in this particular context. Controls at least 25%, though you can see why it makes it confusing, because if each one of them has 12.5% ownership, then that doesn't, yeah. There's a lot of contours to this law that have not been figured out, and it's going to work, all the details are going to work out, but this is brand new. Important to note that if somebody has an investor that is also a business and a registered entity, so say somebody set up an LLC to invest in a business, that LLC is technically a beneficial owner, but the reporting cannot be that the LLC is a beneficial owner. The report has to dive down until there is an individual found that owns an interest in the business, whether it's, the person who set up the LLC, who owns an ownership interest in your business. The person who set up the LLC has to be disclosed as a potential beneficial owner. It goes pretty far. Let's see. Zeph says, I have 2 companies. Company A 100% owns company B. I am 100% owner of company B. I listed myself as the beneficial owner of company B. So again, not being able to get into specific advice. If someone has, for example, an LLC that is the 100% owner of a corporation, and it's just the same person, that individual person must be reported as a beneficial owner because they are both the owner of the corporation and they're the owner of the LLC that owns the corporation, if that makes sense. Let's see, Paula says, I am the owner and I have no employees other than myself. Do I need to register because they already have all my information for my business? Any business has to register, even if the information is already with Secretary of State or some other government authority. This report has to be filed. Right, so Susan says as well, for a friend who also has cooperatively owned LLC, no one has over 20%. There again, has to be the analysis of who has decision-making authority, who has the ability to appoint or remove. Is there a board? The board chair probably and executives would be in a corporation or in a nonprofit, usually are the ones who have that power. But it could be if, you know, if there's a bunch of members and none of them has over 20% owner, do the members have the ability to hire or fire? Do they have the ability to vote on major decisions like that? They might be considered a beneficial owner anyways. And you can see that this is a calculation of if there is some gray area in there, it's kind of a pain to report. It's not that much, but it's kind of a pain to have to do it and have to keep up the information and whose information has changed. So yeah, to the extent possible, it'd be nice to minimize who has to be reported. Unfortunately, it's still pretty gray and it's not clear. Correct, Hannah. So a sole proprietor who has not registered with the Secretary of State does not need to file. Or a sole proprietor who has only registered a DBA or an assumed name, which is doing business as. So if somebody is just doing business as themselves or doing business under a name and all they filed with the Secretary of State is a DBA or an assumed name registration, that does not trigger a reporting requirement. That's considered to be sole proprietor, somebody who has not filed a registered entity with the state.
Nicole, I wonder if it would be helpful for some people if you could just give a quick understanding about what a business entity is versus a sole proprietor.
Yes.
Thank you.
Sure. So, yeah, I might be using circular words here. A sole proprietor includes both people who are just doing stuff to sell things or to earn a little bit of money on the side. So a self-employed individual is a sole proprietor. A person who is engaging in business and is simply working for themselves is considered a sole proprietor. A sole proprietorship is the default for a person who's doing business like that. And that's just a category that the law uses to say, where do they fit? Okay, they're doing business, but they're unregistered. They haven't done anything with the Secretary of State. They're over here. They're just working by themselves. They're a sole proprietorship. There is also the ability to file a business entity with the Secretary of State. And what that does is it creates a shell. It creates a thing that holds can hold the assets for a business, can also hold the liabilities for a business, and it can protect the owners from those liabilities. So lawsuits, debts of the business, those things, that's what a business entity is intended to be able to hold and protect the owners from. But a business entity does not exist until there is a document filed with the Secretary of State. It's either called the Articles of Organization or the Articles of Incorporation. It's also called a charter. That document has to be filed with the Secretary of State. And sometimes people will also have a separate governance agreement, an operating agreement or bylaws that are not filed with Secretary of State. But those are the steps that need to be taken to set up one of these registered entities. If someone has not taken those steps, if someone is just doing businesses themselves, or they've only registered to DBA with the Secretary of State, if they haven't taken those additional steps of filing the articles or setting up an operating agreement, that means that person does not have a reporting requirement. It's the filing with the Secretary of State that triggers the reporting requirement. Does that help?
Yes, I think it does. For example, setting up a business entity would be if somebody takes the formalized step of creating a limited liability company, an LLC, or a corporation, or a benefits corporation, or nonprofit. Those are very specific steps that are different when setting up a business with the Secretary of State versus just getting an assumed business name, which would make them a sole proprietor.
Yes, that's correct.
Okay, great. Thank you.
Wait, Nicole, though, I have a question, clarifying question, please. So if somebody, sole proprietor, goes to the Secretary of State, registers as a sole proprietor, but does not file those articles, the charter or articles of, it's just one person, selling flowers, but they register their name as a sole proprietor. That's it. That's all they do. Do they trigger the BOIR requirement?
They do not, because I'm assuming that because there is no just sole proprietor registration, there is a registration for a DBA or an assumed name. And so someone who has not filed the articles, who has not set up the limited liability company or the corporation, has not paid the filing fee. So maybe that's the trigger, is if there was an assumed name filing fee, then that means it's just a DBA or an assumed name. It's just a sole proprietor. That person does not have to file a report.
Okay,
The
thank you.
moment that they file with the Secretary of State, that triggers the reporting requirement. If it's not, I'm sorry, the moment that they file with the Secretary of State, that's not a DBA filing. So just a DBA filing doesn't trigger it.
Okay,
Something that's above a DBA filing that actually sets up a business entity, an LLC or corporation or whatever, that's what
okay,
triggers it.
okay.
It's tricky. Okay. We've been over a few of these already, but who doesn't have to report? Sole proprietors, DBA only. That's the most important one here. Large companies, people who have over 20 full-time employees or have 5 million gross annual receipts, they do not have to file a report. The rest of them you can see here, it sort of falls under heavily regulated categories. So businesses who are in the investment industry, who are doing investment advising, who are doing financial advising, venture capital funds and advisors, they are already heavily regulated, and there's already usually a chain of ownership that the government has information about. So they are exempted from reporting. Nonprofits are exempted from reporting. I'm not sure what the justification is on that, but I would imagine it's because they are still pretty heavily regulated, at least if they want to keep their tax exempt status. We see question here, what if the LLC is inactive? This is what the definition is for an inactive company: created before January 1st, 2020, has no assets, less than 1,000 account activity in the last year. So if a business entity fits those qualifications, it is considered an inactive company. There is no BOI report for that entity. Other questions there, let's see. It's the personal responsibility. The sole proprietor provides the traceability that the BOI seeks to create. The personal responsibility of the sole proprietor is what gets mitigated with an LLC or corporation. So the sole proprietor protecting themselves with an LLC, standing behind that liability shield, can sign a debt on behalf of the business and not personally. I think what the BOI report is trying to get at is to find who is it that owns interest in tiny little companies that are laundering money. But they're casting such a broad net to get it that it's causing a lot of problems. I'm sure a lot of you have heard this. There's an appeal that's currently pending in front of the, can't remember which district, which circuit, but there is actually a couple of appeals to this law. One of them is on a very jurisdictionally specific question, so it's not going to necessarily resolve questions for the nation. Another one, though, is just challenging this law as completely overreaching and potentially crossing into taking some of the powers from the executive branch. So to be determined whether it's actually going to move forward. For right now, we have to assume that everybody has to provide these reports.
Nicole, I'm sorry, would you mind repeating your response to what if the LLC is inactive?
Yes, if an LLC or a registered entity with the Secretary of State, if it was created before January 1st, 2020, if there are no assets in the business, and if there was less than $1,000 account activity in the last year, that is considered to be an inactive company. That company does not have to file a BOI report.
That was before 2020?
If it was created before 2020. So if it was registered with the Secretary of State before January 1st, 2020.
Okay, thank you.
That's what they consider inactive, yeah. All right, any other questions for now? I think we've only got a couple more slides. So what are the penalties and who can see the reported info? I know we had questions on this. The penalties are pretty steep, $500 a day, up to 2 years in jail and a $10,000 fine for jail with jail time. It's not cheap. The important part here, though, is to make sure that it's done, and to make sure that there's somebody who's assigned to keep track of the information, make sure it's updated. So that's on the next slide. Reported info can be viewed, but it can only be viewed currently by law enforcement agencies and some federal agencies. There was some, and as you can imagine, the Securities and Exchange Commission was one of the first ones to gain access to this information. They currently have access to the information starting early 2025. Lenders and investors, with permission given, may access BOI reporting information. So that means if anybody is seeking a loan, if anybody's trying to get financing, as part of the underwriting or the due diligence process, starting early 2025, investors or lenders will be able to ask for that reported information so they can see who owns the business, who has a beneficial ownership stake in it. So that's who can see the reported information. It is otherwise not available. It is not public information. It cannot be accessed by the public. It can only be accessed currently by the limited number of state agencies or federal agencies and state and federal law enforcement agencies, and with permission by underwriters and lenders. Other than that, the information should be private. It's kind of scary to have it out there sometimes, but yeah, there's some concerns there. Tips for compliance. This is what I think folks need to really think about to make sure they stay in compliance. There is a requirement for every time. So when someone files an initial BOI report for the beneficial owner and the company applicant, which can be two separate people, mind you, both those people have to provide their ID that must be uploaded. They have to provide their address, their date of birth, all that information. When they file, they're required to do that every time they file. And that means if there's an initial report filed, they have to upload their ID or their passport. They have to provide that information. If there is a change of information, if they change their address, they have to upload their ID again. They have to provide that information. The solution to that, to not having to upload ID or passport and update that information every time, is to get a FinCEN ID. Again, FinCEN is Financial Crimes Enforcement Network. They will take this information once, the name, the date of birth, the address, and the ID of the person who is filing or who is a beneficial owner. They will give that person a FinCEN ID, and then that FinCEN ID is used to provide updated information, to do change reports, or to file additional reports. So that's just a step to take if there's going to be multiple filings, if there's going to be changes of information, if somebody has a complicated ownership structure, like some of the co-ops who ask questions here, it would be a good idea to get a FinCEN ID just to make sure that it's an easier reporting process and to not have to locate one's driver's license or passport to upload it every time there's a change. It's a good idea to make BOI reporting someone's job duty. It needs to get done. And that includes checking for updated information. So not just filing the report, checking regularly. You can see the last bullet point here. I suggest that you check with your quarterly reports to see if anybody's information has changed that has to be reported. If you existed before January 1st, 2024, I suggest you wait until the end of the year to file your BOI report. And that's because if there is any change of information or anything that shifts, if there's different ownership, if someone's going to have an investor come in or something like that, any potential for changed information before the end of the year, you have until the end of the year to file it. Just wait until the end of the year to file it. And then you don't have to file a change report this year. There is a grace period if someone's information changes and the business was not aware of it and could not report the changed information. There is a grace period of 30 days from the date that that changed information was discovered. So just keep in mind that exists. And that's it, because believe it or not, this is not that deep of a topic, even though there's a lot of subtleties to it. Oh, I'm sorry, Zeph, I missed a question there. I've already filed on an inactive company per this definition. Do I need to do anything to withdraw my filing or just leave it be? Yeah, slides will be made available, Heidi. And Zeph, if someone's already filed on an inactive company, as far as I know, there's nothing else to be done. It's that company just won't require an additional report. But I don't think there's any consequences to filing something that didn't need to be filed. Okay, so just want to let you guys know what we can provide. You can see our contact information here, where we provide access to legal services for Vermont small businesses. We can do an educational consult, a one-on-one conversation where we can answer any questions that you have. Our students and faculty love to do those. We let the students go as deep as they want on research to answer really interesting questions, and then they'll explain it to you and have a conversation. We can also do that in a group setting. We like to do group webinars or in-person events. We love to do group educational events, and it doesn't have to be through CVOEO as much as we love them. It could be just a group of people or group of business owners who has some questions and they just want to talk to a lawyer. We'd be happy to show up and do, an hour or two just answering questions or giving them a basic presentation about legal basics for business. We do have some helpful materials and legal resources that we offer to those who come and seek our services. And probably the thing that most people want to know about is we can help you get a free 10 hours with an attorney to get that legal advice. We provide education and information, we cannot provide legal advice, but we have a referral system that will let us find an attorney to work with you, and then we can pay for 10 hours of services that they provide to give you that legal advice at no cost to the business. So that's what we have, and that's the end. Is there any other questions that people have?
Nicole, thank you so much. I would just like to put in a plug for your program. So it's out there to everybody who's watching this. I really encourage people to take advantage of the free 10 hours of legal services that are provided through the Vermont Business Law Center. It's a great service. It really filled a void in the business community. So please, I encourage you to take advantage of it. It's been so helpful to so many of the people that I work with. Nicole, I have a question. So regarding the application, if you're able to answer this, when it comes to filling out the application, how long would you say it generally takes to do? And are there any aspects that jump out to you that people might have a little confusion around or might stumble on?
Takes a couple minutes, really. It's really quick. And the things that people have stumbled on have to do with the things that folks are stumbling on here. What is a beneficial owner? Who do I have to report? So it's a good idea before one actually goes to file the report to do the analysis of, okay, I'm a co-op and I have this many members, and this is the people who have decision-making authority, and these are the people that I'm going to report, and maybe keep that in writing somewhere just so there's a paper trail. That's the big piece of it, because that's where the questions have come up in the folks that I've talked to. It's like, I don't know what to pick on this screen. Who's a beneficial owner? Having that information figured out and ahead of time will make that filing process a lot easier. But yeah, that's where I'm seeing them get hung up.
Okay, thank you. And if somebody comes to you for your 10 hours of services and they're assigned an attorney, can the attorney help them with this? Is this something that the attorney can do?
Oh yeah, absolutely.
Okay.
Really, the only thing that we cannot cover is for an attorney to represent someone in litigation. If it's a court proceeding or a court hearing or a court case, we can't pay for that open-ended bucket of fees to represent a business. But any advice with filing, with reporting, with even preparing for litigation or to represent oneself in litigation, I can pay for that. I just can't pay for active litigation. But yeah, BOI reporting, absolutely. If you want some advice with that, I'd be happy to get you to an attorney.
Great. And I know some of the folks that I've worked with that's access to your program, they've had the lawyers help them register their business, file their articles of incorporation, done an operating agreement as part of the work, review the lease, all that stuff comes free with the 10 hours.
That's correct.
Great.
Yeah.
Great. So Laura,
Yeah.
Okay, could you read the entire business name from the form that you have, please?
Hold on,
Yeah.
Tiffany, we can hear your phone call. Can you mute, please?
thank you, Tiffany. So Laura asks, can you remind me of the benefits of requesting a FinCEN ID, and also how long does it take to receive it?
I don't know how long it takes to receive it. Actually, I have never done that myself. I would imagine it's probably pretty quick. But yeah, the benefit of requesting a FinCEN ID is that if there's changed information, then there doesn't need to be a re-upload of one's driver's license or passport or anything like that. So that's the benefit. FinCEN ID goes with the person. Otherwise, every time there's a filing, there has to be all of that information provided for every person.
Okay, so the FinCEN follows the individual. Is that correct?
Correct.
Okay.
And then the report becomes, individual A, B, and C. If individual A has a FinCEN ID and individual B or C do not have a FinCEN ID, then it becomes providing the FinCEN ID for individual A, and then for B and C, it has to be their name, their address, their date of birth, and upload their ID. Every single time there's a report filed. So it really is, it's a quick shortcut. It may not be as applicable to small business owners if there's only going to be 1 or 2 filings, but.
Okay. So there are a couple of other questions in here.
Yeah. Oh, Zeph's got a great tip. It's also a good idea to have the IDs you need to submit readily available. Take it from Zeph's been through it before getting started. And we sold our subchapter S corporation in 2021, re-registered Secretary of State with our new name, have to keep our company alive while we're being paid, now doing very little business, could be over 1,000. That's one where I really am not comfortable trying to answer that question, Elise. I would love to get you to an attorney who can look at it more closely and see for sure, yes or no, whether a report has to be filed. Yeah, because that's sort of a close case.
Okay.
All right.
Any other questions from folks?
Yeah, do you think it's safer to err on the safe side, and if you're not sure, file anyway? Does that make sense?
Yeah. Yeah. I mean, we don't know what the enforcement's going to look like. We don't know whether it's going to even be carried forward or whether it's going to be enforceable, but the potential consequences are huge. So yeah, I would say if there's any question, unless one has a distinct problem with uploading one's passport or driver's license for the federal government to have, and having your date of birth and everything like that provided, unless there's a strong moral objection, I would say just file it. It's better to be on the safe side there.
Yeah, thanks. And the government has all that information already anyway.
They do, it's true.
Other questions or comments? Okay. Barnes, do you have a question?
Sure. Just wondering, I didn't get anything in the mail regarding this. So does that mean I don't have to do it? Or is it just nobody got anything in the mail?
Nobody got anything in the mail. I think actually Claire Wheeler with Mercy Connection sent a very nice email out to their membership trying to be like, don't panic. This is what you need to know. And that was very helpful. Thank you, Claire.
Yes.
But no, not having any notice in the mail does not mean that one does not have to report.
Oh, okay. Thanks.
It would be nice. That would be very nice.
Yes.
Like, oh shoot, I just didn't get it.
Thank you.
That would be a big mailing. All the
Yeah, it would be a
businesses in the
really
United
big
States.
mailing. It's true. It's a lot of postage. Maybe they wouldn't charge themselves postage. Probably not.
Other questions, comments, concerns?
This is Stephen. I just want to say thank you very much, and I will be in touch to try to get some help.
Great. Happy to help.
Okay, well, with that, I guess we're good, and we'll wrap up here. I want to thank Nicole for sharing her time and expertise and providing clarity around this topic. I really do appreciate it, and I know others do too. So I'm sure it's helpful for those that realize they don't have to do anything, and for those that realize they do. So again, quick plug for Nicole's program. Take advantage of it. You'll have this information will be sent to you as a follow-up from Sophia. You'll get the registry. You'll get the copy of the recording of this class, as well as the links to different support services, and as well as a link to Nicole's program. So thank you, everyone. And a quick shout out to Sophia, who I couldn't do these classes without. So thank you, Sophia. You're the backbone. So thank you.
Not at all. Thank you, Simeon. I really appreciate the support you provide as well. And thank you again to Nicole for providing this content.
Thank you.